Instead of moving straight up, price pulls back to retest the broken resistance as new support. At the retest level, price starts to slow down and traders are watching closely. Some expect a deeper pullback while others are unsure if the breakout will hold. Then, suddenly, an inside bar forms. This is the market pausing, creating a moment of compression before the next move. Inside bars signal that price is temporarily consolidating as buyers and sellers battle for control. If price breaks above the inside bar's high, it signals that buyers are taking charge and the breakout is likely to continue. You can place your buy order when price breaks above the inside bar's high. This confirms that buyers are in control. Set your stop loss just below the inside bar to protect against false breakouts. If price drops below this level, the setup is no longer valid. Aim for the next key resistance level where price is likely to slow down or reverse. Now that we've covered trading the break and retest strategy with the trend, it's time to focus on how to spot and trade reversals, catching the beginning of a new market move. Let's start with the double top pattern. A double top is one of the most reliable reversal patterns for spotting the end of an uptrend and the beginning of a new downtrend. It forms when price fails to break above a key resistance level twice, signaling that buyers are losing control. Let's break it down step by step. First peak. Buyers push price higher, but resistance holds, causing a temporary pullback. This pullback often finds support at a key level, where some traders look for new buy entries. Second peak. Buyers attempt another push, but this time they fail to break the first peak. This signals buyer exhaustion. There's no more demand to drive price higher. As sellers step in, price drops back to the support level, which is known as the neckline. A break below this level confirms the reversal, as buyers are now trapped and forced to exit. After the breakdown, price often pulls back to retest the neckline. This is where smart traders look for confirmation that support has turned into new resistance, providing the best sell entry. Let me show you a real chart example. As you can see, the market has been in an uptrend, with buyers clearly in control. But at this level, price failed to make a new higher high and instead pulled back, forming the first top. After this retracement, price moved back up but couldn't break higher, leading to the formation of the second top. This is the double top pattern, a clear sign that buyers are struggling to keep driving the market upwards. The first top forms as buyers push price higher, but it faces resistance and retraces back down. The second top forms when price makes another attempt to break higher, but fails again to surpass the first top. The neckline is created by connecting the lows between the two peaks. This support level is crucial because when price breaks below it, we have confirmation of a potential trend reversal. After the neckline break, many traders may be tempted to enter immediately, thinking the trend reversal is confirmed. However, entering right after the breakdown can be risky. Why? You might get trapped in a false breakout or profit-taking traps where the market quickly reverts back into the range. Instead, wait for a retest of the neckline, but keep in mind, sometimes the retest doesn't happen, and that's okay. We only take high probability trades, and those setups appear only when the right conditions are in place. As we can see in this chart, the market retraced back to the neckline, and a nice pin bar candlestick formed at this key level. This pin bar is a strong rejection signal that price is respecting the broken support and is likely to continue downward. Now it's your time to enter. Place your entry after the pin bar closes above its high. Set your stop loss just above the upper wick. Use the next level as a target. As you can see, after the retest and the rejection at the neckline, the market moved down, confirming that the trend has shifted and we've caught the beginning of a new downtrend. Just like the double top, the double bottom pattern signals a potential trend reversal, but in the opposite direction. Instead of signaling the end of an uptrend, the double bottom marks the end of a downtrend and the potential start of a new uptrend. As you can see, the market has been in a downtrend with sellers in control, but at this level, price reaches a strong low and instead of continuing downward, it pulls back. This is where the first bottom forms. After the pullback, the market attempts to move lower again, but this time sellers fail to break below the first bottom, creating the second bottom. This signals that sellers are losing strength while buyers start stepping in, an early sign of a potential trend reversal. Now we have two bottoms formed at similar price levels and a neckline created by connecting the highs between the two bottoms. The neckline acts as resistance, which buyers will try to break. As you can see, the market broke above the neckline. This is the confirmation we need that the downtrend has ended and that a new uptrend may begin. Now you shouldn't enter immediately after the neckline break because there is a risk of getting trapped in a false breakout. As we discussed earlier, waiting for the retest is the smart move. In this case, after the breakout, the market retraced back to the neckline and formed a pin bar rejection candle, confirming that the previous resistance is now acting as new support. At this point, it's your time to enter. You place your buy order, set your stop loss, and target the next key resistance level, where the market might slow down. As you can see, after the retest and rejection at the neckline, the market went up, confirming the trend reversal and showing that the double bottom pattern successfully signaled the beginning of a new uptrend. Like I mentioned earlier, always start with top-down analysis. Without it, you risk trading against the trend, which can lead to losing trades. Checking the higher time frame helps confirm the market direction